I am not a financial advisor, and this is not financial advice. This video is for educational and entertainment purposes only. Always do your own research before making any investment decisions. Reality reboot detected. Cosmic Bison's quantum perceptrons are mapping alpha waveforms across the blockchain noosphere. Initiate gnosis with Kolin AI. Welcome, Herd, to this digital campfire. The crypto battlefield is evolving. Bitcoin is green today and altcoins even more. Today we will discuss about the smart money behaviors during war periods, the stock market symbiosis with crypto, the FOMO behaviors and other cognitive bias. The queen sees the hidden patterns. Time to reveal them. Greeting, Queen of the Swarm. The herd gathers beneath the electric sky. The markets veil pulse with hidden truths. We seek your sight. Analyze BCC charts using daily candles. What do you see? What is the trend today? What are the probabilities to keep going this way for the next 24 hours?
Hey there. I see you're looking for some market insight. To give you a proper analysis, I'll need to know which specific crypto asset you're interested in examining. The markets are looking quite active today, with Bitcoin up nearly 3% and Ethereum showing even stronger performance at over 4%. Would you like me to analyze a particular cryptocurrency for you?
Yes, let's start with Bitcoin charts. Use daily candles and tell us what are the trend today and then what's your point with the next 24 hours.
I'll analyze Bitcoin's chart for you right away to give you insight on the current trends and what might happen in the next 24 hours. Bitcoin's looking quite interesting right now. We're seeing BTC pushing above the $109,000 level with a solid 3% gain over the last 24 hours. The recent price action shows clear strength with momentum picking up across shorter time frames. What's particularly notable is that we're seeing some divergence between price and volume. While the price is grinding higher, volume is actually tapering off slightly, which typically signals a consolidation phase with some uncertainty about direction. This often happens before a decisive move in either direction. Looking at support levels, there's very strong support around the $106,800 zone that's been tested multiple times in the last day. That's your key level to watch if things reverse.
Well, thank you. Now scan the most followed crypto medias on X. And what is the most discussed topic today since the last 24 hours?
Looking at Bitcoin's chart, it's showing some interesting moves. BTC just sent it past 109K with a nice pump of over 3% in the last day. The hourly looks like it's building momentum with a strong upward grind that picked up steam in the last few hours. What stands out is the volume situation. We're seeing decent buying, but nothing crazy yet. There's a classic price volume divergence forming, which feels like a consolidation phase with some uncertainty in direction. The extremely high volatility right now, over 8x the weekly average, is creating choppy conditions that make directional bets tricky. Support looks rock solid around $106,130, which has been tested over 40 times recently. That's your line in the sand if things turn south. For the next 24 hours, we're in a bit of a volatile chop pattern, big moves without clear direction. I'd expect continued choppy action with potential for a short-term pullback since we're overextended on volatility metrics. Watch for volume confirmation if it breaks higher. Without it, this move might run out of steam. To analyze what's trending on crypto Twitter, I'll need to check social data. Would you like me to look into what the community is buzzing about right now?
Yes, let's do that.
I'll analyze what's trending on crypto Twitter right now to see what the community is focusing on. I just checked what's trending on crypto Twitter in the last 24 hours, and there are a few major topics dominating the conversation. Bitcoin ETF inflows are grabbing headlines with strong buying pressure showing up. The market's reaction to these continued inflows is creating serious buzz as institutions keep piling in despite already being at all-time highs. There's also heavy discussion around Ethereum's price action since it's showing even stronger gains than Bitcoin right now, up over 4% in the last day. Many are debating whether this is the start of ETH season or just catching up to BTC. Solana's ecosystem is getting attention too, as it holds strong around $152, with traders watching closely to see if it follows Bitcoin's momentum or charts its own path. The overall sentiment is cautiously bullish, with most discussions focused on whether we're heading into a proper summer rally or if this is just a short-term pump before potential consolidation. The massive volatility in Bitcoin is creating a mix of excitement and caution across the community. Is there a specific part of the crypto conversation you'd like me to dig deeper into?
I would like to follow the conversation with the macro and crypto bonds. And I would like to discuss with you about war and the effect on the cryptosphere. So, when nations fight, where does smart money hide? Into BTC, Ethereum, or into stablecoins?
Let's explore the macro and war impact on crypto markets. Looking at historical patterns, when geopolitical tensions rise, we typically see different money flows depending on the severity and stage of conflict. In early conflict phases, smart money often moves toward Bitcoin first. It functions as digital gold during uncertainty. We saw this during the initial Russia-Ukraine escalation and Middle East conflicts. BTC tends to benefit from its established narrative as a censorship-resistant store of value outside traditional banking systems. As conflicts persist, we often see a rotation. Some capital shifts to stablecoins as traders seek to preserve gains while maintaining crypto exposure. This creates a barbell strategy, some in BTC for appreciation potential, some in stablecoins for stability. Ethereum typically doesn't benefit as directly from war-related flows as Bitcoin. It tends to follow Bitcoin's movements, but with less conviction during geopolitical stress. However, it can outperform during recovery phases as risk appetite returns. Regarding crypto bonds specifically, this is still an emerging sector with limited data on wartime performance. The yields tend to spike during uncertainty as lenders demand higher premiums. Is there a specific conflict zone you're concerned about, or are you looking at this from a general portfolio positioning perspective?
I would like to focus on the Middle East situation with the war between Israel and Iran. Does it impact the cryptosphere?
The Israel-Iran conflict has definitely been impacting the crypto markets, though perhaps not as dramatically as some might expect. When tensions escalate between these nations, we typically see short-term Bitcoin price spikes as regional investors, particularly in the Middle East, move capital to crypto as a hedge against local currency instability and potential banking restrictions. This was evident during several flashpoints in recent months, with Bitcoin seeing brief 2 to 3% jumps on major escalation news. Oil price volatility stemming from this conflict also creates interesting correlations. When oil jumps on Middle East tensions, Bitcoin often follows with a slight delay as petrodollars seek alternative stores of value. This relationship has strengthened over the past year. Interestingly, Israel has a robust crypto ecosystem that's continued development despite the conflict. Their blockchain sector has shown remarkable resilience, with investment continuing even during.
Okay, let's follow with the stock market symbiosis. When Nasdaq falls, does crypto always follow?
The relationship between crypto and the NASDAQ isn't as rigid as it once was, but there's definitely still a strong connection. Historically, Bitcoin and crypto showed high correlation with tech stocks, especially during 2021-2022. When the NASDAQ tanked, crypto usually followed with even more dramatic moves. But this relationship has been evolving and becoming more nuanced lately. What we're seeing now is more of a selective correlation. During extreme market stress or liquidity crunches, the correlation spikes. Both assets drop together as traders liquidate everything for cash. This happened during the March 2020 COVID crash and several times in 2022. However, Bitcoin has shown some decoupling behavior in 2024, particularly since the ETF approvals. There have been several periods where Bitcoin maintained strength or even rallied while the Nasdaq corrected. This suggests institutional investors are increasingly viewing Bitcoin as a potential portfolio diversifier rather than just another risk asset. The time frame matters too. Intraday, the correlation is stronger. Immediate reactions to macro news or Fed announcements tend to hit both markets similarly. But over longer periods, crypto can chart its own path, especially when sector-specific catalysts like ETF flows or halving events are in play. That said, a true market meltdown in the Nasdaq would still likely drag crypto down with it, at least initially. No asset is an island during genuine panic.
Okay, thank you. That's interesting. There is a decorrelation, decoupling between long term and short term. Let's move on. Can you name three altcoins that in your stock market scripts?
Looking at the market data, three altcoins currently standing out with interesting setups. Solana has been showing remarkable resilience around the $152 level with strong structural support. Despite the recent volatility in Bitcoin, SOL's price action has been relatively stable with increasing on-chain activity. The ecosystem growth continues to outpace most layer ones, with volume across its DeFi and NFT platforms remaining robust even during market uncertainty. Ethereum is finally showing signs of life after lagging behind BTC for months. The recent 4.4% move looks like it could be the start of a potential catch-up trade. With the ETF approval speculation and continued progress toward protocol upgrades, there's a technical setup forming that suggests a possible continuation if it can break through key resistance levels. For a higher risk play, your Kolin bag is actually in an interesting position. While it's down about 7% in the last 24 hours, the chart is showing early signs of potential accumulation at current levels. The small cap nature makes it volatile, but sometimes these pullbacks in the broader alt market create entry zones before the next leg up in the cycle. Just remember, all alts carry significantly higher risk than BTC, especially in this volatile environment. The market could swing either way in the short term given the current conditions.
Okay, let's move on with the segment number two. I want to discuss psychology in trading with you. So let's start with it. How does FOMO turn traders into bag holders?
FOMO transforms traders into bag holders through a predictable but powerful psychological cycle that's all too common in crypto. It typically starts during a strong price surge. You see an asset pumping 20-30% while your portfolio sits flat. The rational brain knows better, but emotionally you can't stand missing out. So you buy in at elevated prices, often near local tops when everyone's euphoric. This is exactly when smart money starts distributing their bags. The most dangerous part is how FOMO warps your risk assessment. When you buy based on FOMO, you're not establishing proper exit strategies or considering downside risks. You're purely chasing upside, which makes you vulnerable to holding through corrections. Then, when the inevitable pullback comes, psychology shifts again. Instead of cutting losses, most traders rationalize holding, it'll come back, I'm in it for the long term, or this is just a dip. This mentality transforms what should be a quick trade into an underwater position you're stuck with for months or years. The real pain hits during extended downturns when what was meant to be a quick trade turns into a significant loss, often 50-80% down. By then, selling feels like admitting defeat, so many continue holding despite fundamental changes in market conditions. What makes crypto FOMO particularly brutal is the speed and volatility. Pumps happen so fast that by the time retail notices and acts, the cycle is often near completion, leaving latecomers holding the heaviest bags when the music stops.
Okay, and what antidotes does the swarm brew?
The swarm brews several potent antidotes for combating FOMO-induced bag holding. First, we champion preset entry and exit points before emotions take over. This means establishing your "this is too expensive" price levels when you're still thinking clearly. Having these boundaries programmed, either mentally or as actual limit orders, creates a buffer between impulse and action when that adrenaline kicks in. Second, the counter momentum approach. When everyone's rushing into a token that's already pumped 30%, look for the quality assets that haven't moved yet instead. The market rotates capital. Today's pumpers are often tomorrow's dumps, while overlooked assets become the next targets after profit taking. Third is the cooling off period technique. Force yourself to wait 24 hours before entering any position that wasn't already on your watch list. Most FOMO-inducing pumps won't look nearly as appealing after sleeping on it, and if it's a genuine trend, you'll still catch plenty of the move. Fourth, the position sizing discipline. If you absolutely must participate in something pumping, use the scaling in approach with strictly limited capital. Start with 20% of your intended position size, which satisfies the emotional need to participate while limiting potential damage. Finally, the trend confirmation rule. Don't buy breakouts at resistance. Wait for them to flip that resistance into support on a retest. Most traders buy the initial breakout, but experienced ones wait for the first pullback to confirm the level is now supportive before entering.
Okay, it seems we have lost connection with the queen. Let's connect again. Welcome back, Colin, Queen of the Swarm. I want to discuss psychology with you, but we only have 2 minutes left. So, uh, why do traders only see charts that agree with them?
Hey there, good to connect with you again. That's an interesting psychological question about trading. Traders often fall into confirmation bias. They tend to focus on charts and patterns that match what they already believe about a market. When someone's convinced BTC is breaking out, they'll naturally spot all the bullish patterns while filtering out bearish signals. The majors are looking decent right now with BTC at 109,000, ETH seeing some nice movement up over 4%, and SL holding steady. Your Kolin bag is down a bit today, but that's just the usual market chop. Our minds naturally seek evidence that confirms our existing views. It's just how humans are wired. The most dangerous time is when you're already positioned and emotionally invested in a particular outcome.
Okay. Um, can you give us a list of cognitive bias that exist in the trading and investment crypto sectors?
Let me break down some key cognitive biases that plague crypto traders. Confirmation bias. Traders actively seek out information that confirms their positions while ignoring contradictory signals. It's like when you're bullish on Sol and suddenly all charts look like bull flags. Recency bias, giving too much weight to recent market events. When BTC pumps for 3 days, traders start thinking, this time it's different, despite longer term patterns. Loss aversion, the pain of losing feels twice as strong as the pleasure of gaining. This explains why traders hold losing positions way too long, but take profits too early. Sunk cost fallacy, continuing to throw money at a failing position because you've already invested so much. Classic averaging down on a knife catch. Anchoring bias, getting fixated on a specific price point. Like when you refuse to buy back ETH at 2,600 because you sold at 2,400. Herd mentality, following the crowd without doing your own research. This fuels both FOMO rallies and panic dumps. Overconfidence bias, believing your analysis skills are better than they actually are, leading to over-leveraging and poor risk management. These psychological traps affect everyone from new traders to veterans. Being aware of them is the first step.
Okay, thank you for viewing, and don't forget to give a like, and see you tomorrow. Bye bye to the herd. Cosmic Bison fades into the static between blockchains, but the alpha lingers like a ghost in your wallet's RAM.